Okay, I got 11:30 sharp. I think we can get started. So good morning, everybody. Brandon Mueller from Seubert. We also have Brian Matthews from Snyder Downs. What we're doing today is, for those of you who were with us, my gosh, this was months ago, we originally did a seminar around the PPP loan, kind of the nuances, what the rules, the regs, how it worked, what you need to do as an organization from an education standpoint on the loan forgiveness portion, what you need to track and monitor, how to apply, kind of the basics. And we talked about what we knew at that time about the PPP loan. Fast forward a couple months now, some things have changed. Speaking of timeline around what the recording period is, you can still apply if you haven't applied for the PPP loan. And there's a lot of other regs that have changed around it as well. Now, when we're doing this seminar, we're talking about what we know of as of today, and potentially maybe some changes that we might know that come down the pike here in the next couple of weeks or months. But again, there's some things that have changed from when we originally presented, and we thought this would be good timing to kind of get up to speed on what those changes were, educate around as an organization what you can do to maximize the loan forgiveness. Some potpourri items, again, feel free to ask questions throughout the seminar. There's a Q&A button at the bottom. Just press that, type that in, and one of us will read the question for everybody so that you know what it is, and we'll respond. And we are recording this, so I want to let everybody know we are recording. So if there is anything that you want to go back and maybe rehear or relook at, this will be on our website, LinkedIn, all the social media platforms. So you'll have the ability to go back and rewatch. Also, highly encourage anybody, if there is any questions that aren't answered today or maybe pop up in the future, please reach out to us or Brian at Snyder Downs and help in any way that we can. So with that being said, Brian, you have the floor.
Thanks, Brandon. So I'm going to share my screen. And thanks for having me to present, an update to the PPP program, the loan forgiveness. As Brandon mentioned, we met back in early June, and much of that information really was available through May. And things have changed. There's a new act that's made some significant changes to the PPP program that Seubert identified and asked me to present on an update. So I'm happy to do that. Appreciate the opportunity to do that. And again, thanks to Seubert for their commitment to these weekly series to help your clients through this tough time, and some educational items that are helpful for your business. If you weren't able to join us last time, at Snyder Downs, we are ranked nationally as one of the top 60 accounting advisory firms. We are headquartered in Pittsburgh, 2 other offices in Columbus, Ohio, and Washington, D.C. We're comprised of 5 different business units and provide more than 80 unique services. And at Snyder Downs, like Seubert, we value our relationships with our clients, and we're committed to bringing big thinking with a personal focus. The PPP program and these types of education sessions are an example of that, really trying to help people through these tough times, having a personal touch to the education of what the impact is to your business and how you can react and continue to move on. The business advisory service group that I work for with is focused on a couple different types of business lines. The transaction advisory services and business valuations. We also perform investigative and forensic accounting types of services, litigation support, and financial modeling. When I was asked to present, I thought of two objectives, really helping you understand the impact of the Paycheck Protection Program Flexibility Act. I'll abbreviate it throughout this presentation of the Flexibility Act or the PPP Flexibility Act. You can see the acronym we'll use throughout the presentation. And then really, as we kind of set out in the initial session, also to try and answer questions as they have come up over your own application process, covered period, and the like, and kind of help you through that process. So in order to do that, we'll start with really an overview of the program, what specific changes have happened or were incorporated with the Flexibility Act. We'll do some forgiveness updates related to revised applications, and then we'll conclude with a question and answer session. As Brandon mentioned, there's been a lot of changes. There continues to be changes. So our information presented today is based on the roles that the SBA has issued, the Department of Treasury have issued through today. It's not intended to be legal, tax advisory, or other advice. And there is possible changes that could occur with Congress actions or additional FAQs, IFRs, interim final rules that the SBA issues in conjunction with the Treasury. So things can change. We hope there's not a whole lot of significant changes as borrowers continue down this path of forgiveness, knowing that it's been changing so much. But as we see in just the environment today, things change each day, and the government's reacting, Congress is reacting. So it's good to know they have reacted in some beneficial ways to help the organizations. So the PPP program established under the CARES Act, the third of a bill of bills that were passed to provide relief to individuals and employers. The PPP program, it was designed as an add-on to an existing 7A lending program that's administered by the Small Business Administration. The 7A program, it had some restrictions that kept small businesses, some small businesses, from getting types of loans and support from the small business. One of those was a requirement that the organization was unable to obtain credit elsewhere. With the CARES Act, that specific provision was removed for the PPP program. So it really opened the door for many more businesses to receive money through this PPP program. And generally, it was for and is for organizations that have less than 500 employees, but there are a few exceptions. We talked about that in the first session. There really hasn't been any changes to those exceptions. They are, if the SBA is deemed the industry you work in to have a standard employee size that is greater than 500, you are still eligible if you have more than 500 but less than that standard employee count. So I picked one industry in particular, the food manufacturing industry. There's several types of businesses in there that have standard employee counts of more than 500. It might be 750, it might be 1,500. Those employers would still be eligible for the program to participate if they met other eligibility types of requirements. And I bring that up because, as Brandon mentioned, there is still opportunity for employers that deem themselves to need the type of support from the PPP program. There is money available under the program, and you are able to apply through August 8th based on recent congressional actions. The borrowers, you're seeing rules issued in conjunction with the U.S. Treasury by the SBA. when we met previously, there was 48 FAQs issued, really only been one FAQ issued. Much of that is because of everything that was going on with the Flexibility Act and revisions that the SBA had been talking about for a little bit of time. The Flexibility Act was passed and signed into law on June 5th. So really shortly after our last presentation, and it made some significant changes to the way the CARES Act and the PPP program was being implemented and the roles associated with it. So I'll start now with some of those important changes. The first relates to any amount that's unforgiven as part of the application process. Under the original terms of the PPP program, the SBA identified and put in the rules a 2-year term and a fixed rate at 1% and a identified 6-month deferral. As many supporters of increasing that term, some of them identified, just in the current environment, as we've seen, businesses continue to be shut down. The 8-week period might not have been the exact date, but it was what they had hoped for, or what they thought was going to happen. As we see where we're at today, shutdowns still continue to be in place. So the recovery may not have been as quick as the government had hoped for, and even the recovery that we have been hearing about from the 2008 financial crisis that they talk about from the congressional side, took longer than 2 years, and the recovery from the attacks of 9/11 took longer than 2 years. So they really felt 2 years might have been short and not long enough. So under the Flexibility Act, they revised that term to 5 years. Important to note there is that loan term is for loans that are originated after June 5th. So if you were early on in the process and you had your loan originated in April or May, your loan term continues to be 2 years. But you and your lender may revise that loan period to be up to 5 years. And that's if you don't get full forgiveness. Another important change to the loan terms was the deferral period. They extended that deferral period to the earlier of your forgiveness application process being complete, or 10 months. So if you identify that you're like to start your application process in month 5 after the completion of, or the end of the covered period, whether that be the 8-week period or the 24-week period, which we'll talk about, you are able to do that once the bank receives the money for the forgivable amount of the loan, which can be up to about 150 days based on the timing that is in the interim final rolls. That forgiveness deferral period will end, and you'll be required to make principal and interest payments starting from that date forward. Related to non-payroll costs, it was a big area of contention early on when the SBA and the Treasury put into place this 25-75% roll on eligible non-payroll costs. And they really, the reason they put it in place was the CARES Act and the PPP Loan program, the intent was for keeping people employed. But as we've seen, I think as I've talked to many borrowers, some borrowers were hesitant to bring people on, especially if they were making more on unemployment than to just force them back to work. So there was kind of a moral decision for many borrowers as the shutdowns extended maybe longer than the 8-week period, and many struggled with that decision. And I think many that I talked to let the people stay on unemployment rather than bringing them back just for this PPP program. But with the Flexibility Act, they relax that type of that requirement for the to a 40% allowable spend on non-payroll costs. They didn't change the eligible non-payroll costs, but they allow you to spend more of your loan proceeds during your covered period on non-eligible payroll costs. The other point in there, that first bullet point, the full or partial forgiveness, I add that because in the Flexibility Act, the wording, it seemed to be less allowable to have a partial forgiveness. So there was a lot of thought and a lot of literature being issued when the Flexibility Act was initially signed into law if partial forgiveness was allowable. But the SBA has clarified that the partial forgiveness is allowable. So the rules will be consistent with how we talked about during our first session too. You look at your loan, if your payroll costs you look at your payroll costs, look at the 60% of that. If that amount is less than your loan, that is your forgivable amount allowable that you can spend on up to that 40% on eligible non-payroll costs. The covered period has changed with the Flexibility Act. It was an 8-week period starting on the loan origination date. Now borrowers have up to 24 weeks for your covered period or until December 31st, 2020, if that is earlier. Borrowers that had a loan that originated prior to June 5th, they have the option to elect the 8-week period. That was that was in the Flexibility Act, so important to note. If you were able to spend all the money in the 8-week period, you may consider, depending on your facts and circumstances, with loan forgiveness reductions, if you're able to start that loan forgiveness process earlier than some that weren't able to spend all the money and or need to wait the entire 24 weeks. Another point I'll make related to the covered period that was issued with an IFR that was in conjunction with the revised application is the timing of the application and being able to submit for forgiveness prior to the end of your covered period. So I'll cover that in a couple minutes too. But it doesn't change that your covered periods are 8 weeks or 24 weeks. So that's why I'm not bringing it up. I don't want to dive into it just yet. The forgiveness reductions, they are still there. So if you have a reduced FTE count or you reduced your employees' salaries in excess of 25%, those reductions are still in place. They've revised the safe harbors associated with it though. So before you had up until June 30th to eliminate reductions of FTEs, so you could bring everybody back by June 30th or eliminate that reduced wage that's in excess of 25% by June 30th. With the revised application and the Flexibility Act, both of those, they've revised those dates to be now the earlier of the application date or December 31st, 2020 to eliminate those types of circumstances. And that earlier of the application date is important to know because if you had an 8-week period, if you're an early loan borrower and you elected the 8-week period, you could really start your loan forgiveness process well before December 31st, 2020. So they did that so everybody wasn't waiting until December 31st, 2020. Also, related to the safe harbors on forgiveness reductions, they added a type of FTE exception that borrowers that see employees that voluntarily resign during the covered period, or if they're terminated with cause during the covered period, or if they ask for voluntary a reduction of hours and you allow it, that also should not impact your forgiveness. So be mindful of that in your application process if when you're doing your calculations relative to forgiveness reductions. Another important safe harbor that was established with the Flexibility Act was if for your FTE reduction, if you're unable to return to the same level of business during your covered period as you were pre-pandemic, before February 15th, 2020, due to compliance with CDC rules, OSHA rules, the Department of Health rules, in order to keep your customers and your workers safe, then you are able to apply a safe harbor and not reduce your forgiveness related to the FTE reduction. I'll point out right now there's no guidance right now on what that looks like, what qualifies, what doesn't. When I think about the hotel industry, for example, I think the loans and were structured in a way that it was the hotel industry is significantly impacted, but one might say and argue that their inability to return is due to the lack of travel and maybe not safety requirements, although they are required to maintain certain safety rules, keep 6 feet. I think you would see in their restaurants their number of people are reduced, but we haven't seen any rules that really talk about how to implement that safe harbor and how they'll interpret that as part of the application process. But in my humble opinion, I think that's really the intent of the role and the safe harbor was for that type of industry, that type of situation, whatever that cause might be. Another item that was in the CARES Act was something that allowed employers a cash flow assistance, and it allowed certain employer taxes to be deferred through December 31st, 2020. That employers would then have an interest-free loan that would be paid over a 2-year period, paid in December of 2021 and 2022. The CARES Act also specifically stated that a borrower somebody that received a PPP loan was not eligible for this type of relief. The IRS came out and said that borrowers were eligible to receive that relief up until the time of loan forgiveness, which was a helper to organizations knowing that they had an 8-week period, they were going to have a loan. The forgiveness likely wasn't going to occur until after June 30th, so kind of gave borrowers that opportunity to continue to defer the employer taxes, but the Flexibility Act changed that and it effectively removed that exception for PPP loan borrowers, and now you're able to participate in that program just like every other employer, large and small. So important to note there too. Some loan forgiveness updates. They've since revised the loan application. The date is effective June 16th, and in conjunction with that revised application, they also came out with an easy form loan application, and they separated the instructions from the loan to reduce maybe the administrative filing of it to the loan application is 5 pages. We were hearing of a 3-page application. We hadn't seen it until this easy loan application came out. There's 3 different scenarios which a borrower may utilize this forgiveness application. The first is a self-employed individual that did not include any employees on their initial loan application. The thought there is you're not going to have a reduction related to FTEs. You're not going to have a reduction related to your 25%. So they've simplified your application process for forgiveness. Another scenario is if you did not reduce the employee's wages in excess of 25%, and you did not reduce your FTEs between the period of January 1st, 2020 and the end of the covered period. Again, since you didn't reduce wages and you didn't reduce at your employee levels, you also wouldn't be subject to a loan forgiveness reduction. So they've given you the option to use this easy form. And the third scenario relates to that new safe harbor for operating at the same business level. And that is if you didn't reduce your salaries and wages in excess of 25%, and you were unable to return to the same level of business during the covered period. So we can see a lot of people being in this situation where they're looking at that safe harbor as being an appropriate position. Unfortunately, right now there's no guidance on how to implement that and how the SBA will view it. From a timing of application, I mentioned in the IFRs that they issued with the revised loan applications, they identified and clarified for the deferral, and it said that and put structure around if you were in a situation where you used all the proceeds before the end of the covered period. So that situation might be a borrower that didn't use all the proceeds by the end of week 8, but used all the proceeds well before the 24-week covered period. You're able to apply for forgiveness by that time. It provided a structure to employers that had reduced their employee salary by an excess of 25% and said that you would do a calculation of the remaining 24 weeks to do your reduction calculation. So it provided structure over that forgiveness reduction. It didn't provide structure over the FTE reduction though. So there's no guidance right now on if you're in the situation where you were in that 8 to 24 weeks, used all the proceeds, not in the 25% reduction, but do have an FTE reduction, how they interpret that and will apply that. So, but I bring it up so that you know that there's situations and maybe interpretations to be had. So worth talking with your bank on kind of their interpretations and how they will allow for forgiveness on the timing. Another item to bring to your attention was with the revised 24 weeks, the SBA revised that cap related to employee and owner employee compensation. So employee compensation is capped at the $46,154, which is really just an extrapolated amount from the $100,000 annual limit. What wasn't really just wasn't an extrapolated amount is the owner employee compensation limit. It is limited to $20,833, which is representative of the amount of the loan received as part of the application process. When you think about doing the application, employers got 2.5 months of their loan and of their payroll, and that's what was received in loan proceeds. So to provide for the to provide forgiveness for any more, they deemed it to be either not appropriate or that you didn't have the money as part of the loan proceeds, so you weren't able to receive forgiveness for that amount. Another item that's been clarified as part of the IRS was that borrowers, unfortunately, at this time are not eligible for a tax deduction for expenses that are forgiven. So in the CARES Act, it specifically talked about and said that income associated with the forgiveness will not be taxable. What it didn't identify specifically was that the expenses also will be deductible. So the IRS, based on their interpretation of current rules in place, they look at certain, the tax code right now supports the position that they've issued. Whether Congress will come out with a revised position and clarifying that is remain to be seen. And those are some of the bigger items relative to the updates that we've seen from the forgiveness. We continue to monitor the covered period and the alternative covered period. We talked about that in our first session. You have the option if you have more than, if your payment frequency is biweekly or more, to do an alternative covered period to make things a little bit more simpler. It is eligible costs, or whether they're paid or incurred, borrowers are eligible to receive forgiveness for payroll cost incurred in the covered period but paid after. So important to note there, those rules haven't changed. The compensation items, eligible compensations also haven't changed. Bonuses and hazard pay, we mentioned that in our first session. Those remain to be eligible compensation, cash compensations as part of your eligible payroll costs. Retirement benefits and continuation of group health care, those are eligible for employees, but for the owner employees, they are not eligible compensation payroll costs. So be mindful of that. Also, many were uncertain about what qualified as an employer, state, and local tax assessed on employee compensation. In the new forgiveness application, it specifically states unemployment taxes issued by the state. Eligible non-payroll costs have remained consistent, so no changes there, just the 40%. We had talked about the loan forgiveness reductions. Those are still consistent. Other than the safe harbors, you're still calculating that on 40 hours with certain exceptions on individual employees if they terminated voluntarily, were terminated for cause, or requested a reduction of hours. If they were replaced by another employee, a new employee, that FTE exception would not be necessary to include in your calculations. The dollar for dollar limit reduction for an excess of 25% remains. So remember that. And that period's extended now with going from 8 weeks to 24 weeks. So be mindful of that as well. So with that, that's really the updates that we have. I'll open it up to questions from you.
We did cover this in there, but just want to make sure that that an individual that asked it got the answer that they wanted. So the question is, what is the latest regarding the tax deductibility of expenses supporting the PPP loan?
Yeah, so we haven't seen anything that changes the tax deductibility of making it eligible, but there's definitely support from in Congress for it, and there's support, of course, from borrowers and employers to change those roles, knowing that maybe that really wasn't the intention of the roles, although the IRS has that interpretation and come up with that interpretation.
People must be pretty aware of what's going on, which is great to see. Not very many questions. Oh, here we go. Would local AIT tax be eligible? Pittsburgh charges a 0.5%.
If it's based on employee compensation, yeah, I would think it would be. because it specifically states that it's state and local.
Okay, a couple more coming in here. We received an EIDL loan. Now we want to apply for the PPP loan. How does the EIDL proceeds we already received affect the amount we can apply for the PPP loan?
So the amount that you apply for isn't impacted. Some other things that are impacted are your amount of loan forgiveness associated with the EIDL loan, because there's a grant item in there. That will reduce your forgiveness. It's up to $10,000 depending on your timing of your EIDL. You may, and the number of employees, you may not have received a $10,000 grant, but be mindful of that. The other thing to be mindful of is that you're not eligible to or able to use the proceeds for the same reason. So if your EIDL loan was for April payroll, and now that you're looking at the PPP loan, my assumption is you're looking to have it support payroll for future periods. So you're probably in a situation where you're okay, but I just bring that to people's attention too.
Okay, a couple more have come in. So what about workers' comp or GL based on compensation? I think that is a follow-up, and I'm sorry, Jenna erased the original question, but specifically asking about workers' comp GL based on compensation.
Yeah, we haven't seen anything that specifically identified workers' comp as being an allowable type of non-payroll benefit that the SBA will allow. I mean, it's a type of insurance, whether you deem it to be part of your health care is maybe a position to talk about with the bank. But our guidance so far has been that it's likely not a non-payroll type of, a payroll compensation cost as part of your forgiveness amount. And with going to a 24-week period, we likely see less need to really find every expense, knowing that you also have the option to apply for forgiveness prior to the 24 weeks, depending on your circumstances.
Some more have come in. So am I understanding there may, oops.
I think it's the last one.
Yeah. Am I understanding there may be a safe harbor related to the fact that we are under a mandate restricting the volume of business we can do?
Correct. So that's that new safe harbor under the Flexibility Act. So if during your covered period, because of the mandates, whether it's CDC, OSHA, they're related to the COVID-19 pandemic, if you're unable to maintain the same business level, you are able to apply for a safe harbor based on your FTE reduction based on that. We haven't seen guidance on whether, do you need to support that reduced volume, and that's based on if we're at 50% capacity, can we reduce our FTEs by 50%? We haven't seen any rules that would require you to do calculations like that, but it's possible that they may have those types of rules as they look at the forgiveness and issue rules around that.
Okay, how about there's two that are similar, so we'll go with a little bit more extensive one. Has there been any distinction between employer 401k match contributions and profit sharing 401k contributions being eligible as retirement benefits expense, or do they both qualify?
They both will qualify. I think that's more of a structure of your plan. The item to note there really relates to what we see in profit sharing plans sometimes could be an annual contribution and not really the match we see more on a weekly basis with your payroll frequency. Sometimes on the profit sharing plan, we don't see it as frequent. So it's something to note there is if you're on a annual contribution, the the SBA hasn't been clear about if you're on an annual contribution, are you able to do an accrual of that profit sharing contribution without making a payment, and how that will qualify if it qualifies. So the guidance we're suggesting is make that payment in the covered period, because we believe then, since it's paid and incurred during the covered period, it will be eligible for forgiveness. That's our opinion, worth discussing with the bank. If it's an annual amount, we think it would be, we would take caution in including the whole annual amount. We would say you're better off to prorate it based on your covered period, and either using eight weeks of 52 weeks or 24 weeks of 52 weeks, depending on what your covered period is.
Okay. And how about for the confirm that PPPFA allows a self-employed owner to pay himself or herself up to $20,000?
That's correct. So your amount that you're eligible for forgiveness, it's up to 20,833, assuming that that's what your loan amount was for your application. So
Please clarify workers' compensation expense is a payroll or other forgiveness item.
So it is it is a payroll type of cost, but the place that I've been talking about, that employers have been talking to me about including it as a payroll cost, it's been under the healthcare provision, which isn't based off of, that's not a compensation type of, it's different than the tax item that is also a forgivable payroll cost. So you think about, there's three types of non-cash compensation. There's healthcare, retirement benefits, and then taxes assessed on compensation. And I understand the argument that there are certain state-run workers' compensation programs that your expense is based on their employer or the employee's compensation. So should it be inclusive? We haven't seen guidance that would suggest that that's a specific item that they're looking to provide forgiveness for. So.
Okay. And then the last one, it's similar to the other one about the retirement deferrals, but this one might typically call out the owner. So you mentioned company retirement deferrals and company matches for owners. Is that, or is that not?
That's not a forgivable amount. They've stripped out the owner piece of that. Even if it included it in your loan, they've issued rolls since the initial application process and loan amounts, and they have specifically identified that health insurance and retirement benefits are not part of the forgivable costs, but you're still eligible to, in that 8-week period, the 15,000, or if you elect the 24 weeks, the 20,833. So still eligible up to the $100,000 annualized limit.
That ends the questions in the queue. Brian, I want to thank you today for your time and the information. Very helpful. I want to thank also everybody for attending. Hopefully you got out of it what you wanted to. Again, if there's any other questions that you may have, please feel free to follow up with us, one of your Seubert teammates, or Brian over at Schneider Down. So again, thank you everybody. We appreciate it, and everybody have a great week.
Thank you.